Everybody, and very pleased to be here back again in Edinburgh. Wanted to give you an overview of BMR. BMR is a company listed on AIM. I'll come to the size in just a moment, but we are very much focused on our principal asset in Zambia. The company's been around for a number of years on AIM under a slightly different name of Berkeley Mineral Resources, but the management team has only been involved for the last couple of years. We didn't want to hide the past, if some of you have been investors going back a number of years. So we've kept the name BMR as a different logo. Beneath it, I just wanted to point out the flag of Zambia. Zambia is where the main focus of our investment is. And Zambia is a very benign environment for mining operations. We're actually a processor of metals. But the flag of Zambia is there, which symbolizes the green for the rich agriculture, orange for the natural resources, black for the Zambian people, and red for the struggle of the people. The eagle above is showing signs of people rising from the problems they've had in the past. And we like to feel that we are working closely with the Zambians and the Zambian government in particular to revitalize part of the operations that have existed in Zambia. We have focused in Kabwe, which is a very polluted place in Zambia, and it's full of very unhealthy stuff. I think Kabwe is listed as one of the 10 most polluted places on the planet, and our focus is, as well as making money for shareholders, it's in part to rehabilitate the environment. So we are, our disclaimer, which we can run through fairly quickly. We've got a market cap of only £15 million at the moment. The share price is 7p. We've doubled the share price over the last 12 months. We'll come to it at the end, but we have a broker's note that has been published 3 times now that gives a target share price for us of 27p. So we think there's an awful lot of mileage in our share price, room to maneuver. We've got over 1,000 shareholders. We have no significant shareholders whatsoever. We're very much a retail stock. There was a report in the FT today saying that companies that are listed shouldn't have a shareholder base of more than 50% held in the hands of a couple of people. Or we're at completely the opposite end of that, with only, I think, 3% disclosed shareholder, and the rest are some large nominee holders. So, who are we? First of all, I'm Alex, and I joined the company at the end of 2014. I have been an investment banker for the last 20 years, or for the first 20 years, having qualified as an accountant. And for the last 10 years or so, I've been working very much involved with a number of companies in the mining sector. I came in as a troubleshooter for BMR. It had its difficulties. Money had gone missing. We suspended the shares. I raised £1 million in settlement for BMR, and we got relisted in May 15. And as I say, the share price has more than doubled in that time. I've also got links with a couple of other mining companies. I was a director, CEO, in fact, of Metal Tiger to the end of last year, and I'm chairman of Greatland Gold, which is a gold mining exploration company focused in Australia and Tasmania. Just introduce Jeremy. It's very important for me in building up BMR because I replaced all the directors, sacked all the employees and consultants for various reasons, and had to start again. So what I'd like to say to you is this is a new proposition, a new management team, and it's very important that we have people. Any investment proposition is, first of all, primarily about the people. So that's why 2 of us have come today to see you. And Jeremy, slightly older than me, has had many, many years experience in the mining sector. Jeremy, do you just want to say a little bit about your background?
Yes, very briefly. Thanks, Alex. Anglo-American, started my mining career with Anglo-American at this mine that we're dealing with now. I worked in the Congo with Anglo-American, and I went down to Namibia, worked with Rio Tinto there. Left Rio Tinto, went to Johannesburg, started my own business, came back to the UK, and went into mining consultancy.
Thank you, Jeremy. We work very closely together. We probably speak to each other about 4 or 5 times a day. Even though I'm sporting a black eye at the moment, it's got nothing to do with Jeremy. So what do we have as BMR? After sorting out the problems that we faced, I realized we had a huge asset base at BMR. The asset base comprises tailings. Now, tailings are the byproduct of mining. Mining per se can be a very risky sector to get involved in. It starts off from exploration and investigation to see if anything is under the ground as a possibility. If you're lucky enough to find something, you can start mining it. Mining operations always seem to cost at least £20 million, and the byproduct of mining just sits on the surface. We have got over 10 million tonnes of dry tonnage of tailings that are just full of metals. So it's fantastic that we ended up with a very good asset at the company. So what do we do with the tailings that we have? The first thing is to understand the quality of those tailings. So after testing those and lots of drilling, they have what is called the JORC classification for about half of them, which is a critical factor if you want to raise money and do something with the tailings. How do we convert the tailings into metals? Well, we realize that the tailings are full of zinc and lead, and we have, over the course of 2015, developed a methodology for processing the tailings into zinc and lead. So we have a viable business model. Because it is mining and we're dealing with sulfuric acid in the process, and Kabwe, where we're based in Zambia, is a polluted city, we have to get very careful permission for rehabilitation as well as the processing. So it took 6 months or so to get the permission through from the Zambia Environmental Management Agency, ZIMA, and we got that through in June 16. So that gives us the green light for processing the tailings. We've also acquired a couple of other businesses which I'll come to in Zambia, as well as one in Portugal. The next bit of the jigsaw for us is, what do we do now we've got the permission to put the process into action? How do we do it? Well, we have the plant construction underway at Kabwe now. We have commissioned a peer review of the cost as well as of the processing methodology, and we have put there the capex of 2.68 million. I mean, there's an industry standard deviation there for costing, but it gives a broad parameter. We're not talking about tens of millions of dollars to convert the tailings into metals. We think we can do it very competitively and fairly cheaply, relatively speaking. What do we do once we've got the lead and zinc? Well, we have to find a buyer for that. So we entered into an offtake agreement last year with a South African company, African Compass International, which is great. They also wanted another product, which is zinc sulfate heptahydrate, which is one of the products we can produce from the processing, which is used as an agricultural fertilizer. So that gives us the ability to generate a lot of revenue from the end of this year onwards. How do we finance it all? We've raised little bits of money from time to time. We've also entered into a $5.2 million loan facility agreement through AECI. So we have the finance in place, and we have the sales of the product, and we have now started to build the plant in Kabwe. Jeremy will come on to Star Zinc, which is another mining operation which is very close to us in Kabwe in Zambia, which will add high quality zinc to our product. We've also got, as part of our tailings, something called the Veltz kiln slag, which gives us the opportunity to sell some of that once we get permission through from ZIMA fairly cheaply, which can be used in the construction sector. If you followed our announcements, we have put out a release to say we've applied to ZIMA for approval to sell this. We're in discussions with ZIMA at the moment. There is concern that there may be some leaching of that if it's used in the construction sector, so we're working around the opportunity. The methodology I've mentioned, and Jeremy will come to that shortly, and the process design we have in place. We've started, as I say, to build the plant. That should be completed by the end of this year. Commissioning is the next stage, which we expect to get the green light from ZIMA for, and then we start selling. Initially, on a 5 tons per hour there, we have a 24-hour, 7-day-a-week basis. So we're very confident that we can generate sales from the plant in the very near future. So we believe we've delivered an awful lot very quickly for our shareholder base. We've tested the metals that are there. We've had the peer review of the process. We've got Veltz kiln slag to sell. We've raised money. You can see there, 400,000 at 3p, 400,000 odd at 4.25p. Bear in mind the share price is now over 7p a share. We've got the ZIMA approval for what we're doing. We started the construction of the plant. We have the sale agreement, and we believe that we've got a very strong, viable business model that's well in advance of a number of mining companies that are at earlier stages than we are. And this week we announced the fundraising through the warrant exercise at 6.7p, 7p a share for the warrants, and we raised another £400,000 for that. Over the future, we would look to get drawdowns from the loan facility. That will help us to finance the construction of the plant as well as to acquire Star Zinc when we have the ministerial approval for that. We expect to be able to sell the Veltz kiln slag as well when we've negotiated that through with ZIMA. And the big announcement we will have will be the construction of the plant, and that will be up and running. So leave it to Jeremy to tell you a little bit more about what we're doing in Kabwe, Star Zinc, and the ESTER project.
Oh, thanks, Alex. Just to point out the two photographs at the top, that's the plant being built now. And the one on the right is some drilling that we're doing in part of the license, which we believe might be interesting in the future for us. Anybody, if you're not familiar with Zambia, as you can see, we've got the Kabwe 110 kilometers along the Great North Road from Lusaka, and the Star Zinc project, which I'll talk about a little bit in a moment, 20 kilometers out of Lusaka on the same Great North Road. The mine headlines, which you might be interested in, the mine was founded in 1902, operations in 1904, closed in 1994. During its life, it produced lots of lead, zinc, vanadium, silver, and cadmium. It is, as Alex said, one of the 10 most polluted sites in the world, which is actually an opportunity for us, as it turns out. There is, in total, 6.58 million tons of tailings, which we are going to retreat in one form and another. And the World Bank have kindly come up with a $60 million grant to Zambia to clean up mining sites, including Kabwe. We are unlikely to get any of this money, I hasten to add, but it is a site of great interest to the World Bank. This is a quick breakdown of the stockpiles which we've spoken about. As you can see right at the top, JORC, 3.3 million tons of proved reserves. In other words, JORC means the tonnage is proved and the grade is proved. Non-JORC, we have the Imperial Smelting Furnace slag, which is a major component. The tonnage is accurate at 1.48 million, as are the grades. The only reason it's a non-JORC resource is because it hasn't been established that we can recover metal from it. We've actually done so now. We can do it, and we're going to use it. The rest of the stuff at the bottom are what they call the rats and mice around the place, which are hidden in this plan, which is the dumps which are very close to where we are going to operate. In the bottom of the right-hand corner, you'll see the pyrite, you'll see the blue powder, etc. That's what I call the rats and mice. We can't do very much about it. We know it's around there, it's all mixed up. We'll probably get to it and we'll probably process it. Right, this is a very quick description of the acid brine leach process. The acid brine leach process is a process which is proprietary to BMR. We have developed it. It's our process. We own the rights, the intellectual rights to it. 4 stages. First stage is we have the acid brine leach, which means we take the tailings, we put it into an acid brine leach, 5-stage leach. We then take the pregnant liquor solution and we precipitate that out, and that precipitate will contain the zinc, the lead and the vanadium. The next stage is a little bit clever because we have to split out from the precipitate the zinc, the vanadium and the lead. So there's a rather clever piece of hydrometallurgy which goes on, and we are able to separate out the 3 main components. The third stage is we take the vanadium which has been separated out and we precipitate that and we calcine it and we produce vanadium pentoxide. Very nice, very expensive and very easy for us to produce. The zinc SX, we have to clean the zinc SX up because from there we can either produce zinc cathodes or we can produce the zinc sulfate heptahydrate, and that's just a straightforward crystallization process. The lead is produced in an electrowinning section. We will produce lead sponge there, which is very saleable, 96% lead in the lead sponge. Final stage, fairly self-evident, vanadium pentoxide, lead sponge, zinc sulfate heptahydrate, and zinc cathodes. Right, now this is quite interesting for everybody. The life of the mine is roughly 10 to 20 years. During that period of time, we are going to produce, in terms of gross sales value, $2.4 billion worth of product. That is at current metal prices. In fact, I say current metal prices, zinc has gone up about 10% since this was done. We have a ramp-up strategy. The first stage is obviously the 5-ton-an-hour plant, which Alex mentioned. We hope to get that away but towards the end of the year. Second ramp-up, we're going to try and get that up and running by 2018, where we're going to increase the zinc production to 8,000 tons a year. A second stage ramp-up, which is the big one, and that will include the ISF slag and the leach plant residue, the big, large tonnages, and we expect to take production of zinc up to 25,000 tons a year. One quick word here about our exploration. We are looking at an area in the southeast corner of our existing license, and you can see there all the purple is where we're getting some interesting high-grade figures. We are continuing to drill and we're continuing with that program. Summary, a near-term production, 2017. The life of mine gross income, 2.4 billion. OPEX, $120 a ton of tailings treated. The process is proprietary to BMR. The World Bank we're in discussion with and are very supportive of our efforts to get the Zambian environment cleaned up. We have permission from the ZIMA, which has been mentioned. We have a project life of 19 years, 20 years, as we said, and we have an offtake agreement. Right, quickly on to Star Zinc. This is a very interesting little deposit just outside Lusaka. It was looked at by Anglo-American and drilled about 40, 50 years ago, and we have an option to take this on. It has already drilled out just over 250,000 tons, 20% zinc, so you can see that is quite interesting for us. The ore type is certainly compatible with what we're able to treat at Kabwe. There are two important byproducts there, silver and also germanium. Last but not least, we have some interest in Portugal. It's on the old tungsten mines which ran during the last World War. There was a German mine and an English mine within a few miles of each other, and they operated quite happily during that period of time. We've had the first stage of exploration campaign there, and we've come up with some very interesting results. You can see here we have got some interesting figures on wolfram, tin, etc. We're carrying on with that, and we'll be making an announcement on that in the not too distant future. So over to Alex to finish off.
Just to summarise, as far as our investment proposition is concerned, we have assets. We have assets, we have the process to convert those into metals. We've got the sales in place, and those metals are worth, as Jeremy has said, a substantial amount of money at the moment. And the prices seem to be improving. We have the finance to continue. We've got good debt finance. We have raised cash from equity as well. So we're in a good position as a company. The broker's note, as I said to you, was 27p is their recommendation. I do have copies of the broker's research note. I've got 3 research notes there, if you're interested to have those at the end of this session. We have a very small management team, because one of the things I'm conscious of is that we have to have very low effective wasted operating costs. We've got very few people. So there's just Jeremy and myself and a part-time finance director in the UK, and we have a couple of general managers, 2 consultants, geologists in Zambia working with about 30 Zambians. So it's a very low overhead process. But we believe, having doubled the share price over the last 12 months, it's got the potential to at least double over the next 12 months. Thank you for listening. If you've got any questions.
The 2 there.
Obviously bored everybody to death.
Mainly about vanadium. I think it's quite a major potential, the vanadium side of things. 3 questions. When is the JORC report likely to come out? Then when will the environmental project brief follow from ZIMA? And the additional loop for vanadium on the manufacturing process, is it likely to affect the production of zinc and lead? By that I mean, is it going to restrict the amount of zinc and lead in any way, the process?
Yeah, I think you were asking first of all about the JORC.
Yes,
for
vanadium.
Of the non-JORC, yes, and also about the possibility for producing vanadium and what it's going to mean to the plant process.
Right, the JORC process we can deal with very quickly. We have all of the assay data that was compiled during the original JORC report. So we know exactly how much vanadium there is in the ISF slag and elsewhere. What we have to do now is to demonstrate to the people who put that report together that we can economically recover vanadium metal from these various ISF, the WKS, sorry, not the LPR and the actual wash plant tailings. We have to do. We're doing those tests right now. Once those are complete, we go back to them and say, look, we can do it, and then they'll look at the JORC. So it could be a reasonably quick process. That's
and the cost of producing vanadium from the plant is, we believe, fairly limited. We are analysing that at the moment. We haven't announced what the costing is going to be, but we will announce that. But having vanadium in place gives the company a substantial additional significant asset, which we believe sort of underpins our asset value significantly.
I think the other last question you had, does it affect zinc production? No, it doesn't, because we take the vanadium component out at the re-leach stage of the zinc, and we take that off to one side, and then we process that as a separate stream.
We do have, I tweet occasionally on Twitter. There's a BMR Twitter feed, and on that we've got a YouTube clip and other films that tell you a little bit about our metals, in particular about vanadium recently. Vanadium is one of the exciting metals of today. I mean, zinc and lead have gone up. They were both below $2,000 a tonne 6 months ago. They're both heading up to $3,000 a tonne now. Vanadium pentoxide, I think, is about $21,000 a tonne. And vanadium electrolyte is about $45,000 a tonne. So vanadium is a significant asset if we can start giving you an indication of what we can produce that for.
Okay.
Hello. If I understand your proposition correctly, this is a 19-year fixed-term deal. How would you see the share price being supported going forward as you see the project progression and ultimately the 19 years getting closer and closer?
Well, I think any any chief exec running a company would always say his share price is undervalued. We are conscious in the past with this company that it has put out a number of false announcements under a different management team. So we're very cautious about what we announce. If anything, I get ticked off by some shareholders because I'm too conservative. So we want to make sure everything we release is solid. But against that, we have the analysts in the city who understand what we're doing and put down their own recommendations of where the price should be. And at the moment, as I say, they think the share price should be at around about 27p. So why isn't it 27p now? Number of reasons why. People want companies like us to deliver. We have to build the plant, complete the plant, and start generating revenues. So that puts in black and white that we are true to our word. So I think the price will get there. Secondly, we don't have institutional support in the company at the moment, probably because we're too small at 15 million. And a lot of people have invested at very high prices under the previous management in the past. So I think as the share price moves up, there are a number of sellers that come out. But the most important thing is delivery. You'll see us as a very hands-on, I would hope honest, straightforward management team there to deliver, and we would expect the price to grow as we deliver results to shareholders. Where should it be? We've only got that target share price 27p over the next 12 months. So it gives you an indication. As we develop, as we produce more revenue, then we'd be valued on a completely different basis. One of the opportunities, for instance, is to generate, time's up, is to generate enough cash out of our operations so we can pay dividends. And that's part of our policy going forward.